Hey everyone, this is the Impact Factor, and this is This Week in Investing. This is going to be the first episode, the first part of the series, or whatever you want to call this, a podcast, an update, a stock watch, whatever that is. Basically, the series is inspired by you know who. If you do, you're a G. If you don't, too bad. Maybe I'm going to tell you one day. The idea behind this series is that I will be discussing what I saw in the stock market, what I was looking at, what caught my attention, what's worth paying attention to. I'll be expressing some of my ideas, some of my views, and the way I think about it. Uh, this is equally for you and for me. I do have a trading journal and a trading log. I've been trading for a couple of years now, and I figured it would pay to have a video recording of my thought process of what I was doing, what I was thinking about, and I figured I might as well upload it. And this is how this channel was born. And I was also sick and tired of people calling buying a house an investment. So that's another thing. Anyway, let's get started. So I was looking at some data. Here's a simple table of what I was looking at. I have this somewhere in Excel here. So boy is obviously beginning beginning of the year. Spot is the current price, and I forgot to tell you today is the 17th of January. So it's the technically the third week of the trading year, but the first week was only one day. Some of this data is from the 5th of January, while it says the second here, because some of the indexes, like the Hang Seng and the Korean one, they don't open until the 5th, because the 4th and the 3rd to this month were Saturday and Sunday. So anyway, this week the S&P was down 0.4 over the year, up 1.2. Nikkei had a good start, 4% up. Year to date, almost all of it this week, 3.8% here. Nasdaq dropping 0.7, still up 1% since the beginning of the year. The DAX almost neutral, 3.1% since the beginning of the year. Hong Kong up 1%, 3.1 since the beginning of the year. Korea is off to a really good start. The only major index that I'm looking at that is beating Japan, 3.1% in a week, and 9.8 since the beginning of the year. And this is WIG. This is a Polish index for the Warsaw Stock Exchange. I follow it pretty closely too, minus 0.7 and 0.8 in since the beginning of the year. Some currency pairs, I don't look at them too closely. This is just more to have an idea of what's trading and how in the currency market. The Polish zloty is getting stronger and stronger. So we'll see what I think about that too. Bitcoin is off of to a good start, 9% since the beginning of the year, almost half of it. Well, actually half of it in the last week. Gold is up 2% last week, 6% since the beginning of the year, continuing the rally. Silver up amazing 14% and 24% since the beginning of the year, and of course 14% week to date. Crude oil, just to have an idea, because crude, of course, is crude matters to us because it's used in production of almost anything. So if crude goes up, that means that prices will surely follow, because transport of everything that you make is everywhere. Biotech was down 1.5. Here are some sectors that I follow. I should put some other sectors here. Vibor and Sofr. Vibor is like Libor, but for Warsaw. Sofr is supposedly the replacement of Libor. We'll see how that goes. I got this here just to see if we got another 2008 crash coming or not yet. Uh, this is tech sector, and this is tech, but only software. So this one suffered heavily, and this makes me pretty happy because I think that sector is grossly overvalued. And the more I look at different software companies and their products that are growing at low double digits or sometimes even high single digits, and they trade at a multiple of 50, it's sickening, to be honest. Here I got the U.S. bonds. Maybe I should also have the Polish ones. Here's the yield for the 2-year, 3.6, 4.2 for the 10-year, and 4.8 for the 30-year. Healthy yield curve, no longer inverted. We'll see how that develops. If I find the data, I will have the AAA and BBB bonds here too. And the VIX up 9.5 last week, so the volatility has been going up. We'll see. If that continues, we'll see what happens there. That doesn't really matter too much to me. We had a couple earnings this week. JP Morgan, TSMC, Wells Fargo, Bank of America, Citi, BlackRock, Goldman Sachs. Now, I don't look at banks because I don't know how to. I would like to learn, but it's going to take a lot of time, a lot of balance sheet looking. That's not really my strength, and I don't feel like I'm prepared to look at it. So I won't tell you anything about those. I saw, I think, Bank of America and Wells Fargo, or maybe it was Citi, dropping after the earnings, but that doesn't really mean anything to me. TSMC reported a good quarter. So TSMC had a revenue up 20%. This model is in the billions of Taiwanese new dollars, so don't confuse that. Huge company. I think it's valued at about 1.4 trillion US dollars. We'll see how that goes for them. 20% crazy growth for a big company like this. AI bubble is real. I don't know if it's a bubble, but it definitely is real. 48% profit margins. Incredibly impressive, and especially because the profit margin is going up. That is not what you usually see. A pretty poor model on my side here, but this is not a company I specialize in, and I only see that it's trading at 43 times last 12 months free cash flow. So I don't think I'll be interested in this. And also a huge capex spend there, which is not what I like to see. What I saw this week was Google touching the 4 trillion market cap. Doesn't mean anything. Not really. You might think it does. A milestone. Well, if you're a nerd, maybe. Don't really care. I sold last of my Google shares, I think, in November or December. So there is that. Just another company touching new all-time highs. Really tells you whose side God is really on and where inflation is going in this country. Duolingo reported preliminary results for Q4 2025, and the market didn't like it. The stock dropped from 166, over 6%, to 157, and now it's at 150. Great success for me. I have believed that Duolingo is overvalued for a long time now. I have my model somewhere here. This is my model for Duolingo. I was looking at it when it was still at 454. I think I was looking at it when it was at 300 before. It was already undervalued, and then it went to 500. At 500, this company is basically trading at 60, more than 60. Actually, let's check it out. 511. It was trading at 72 times free cash flow, and that is some crazy number. And it reported preliminary results with CFO stepping down, with the Dow, so daily active users, growing at 30%. And 30% is great. That's a fantastic result. But not when your company is estimated at being worth about $7 billion. And you have a revenue for the last 12 months of less than $1 billion. That is not where you want to be. So 30% would be good for any other company. For Duolingo, could be a death sentence. We'll see if this is the ceiling for Duolingo. If not, it certainly seems like Duolingo is kind of limited, because I don't think you can repeat the same success they had with languages in math or anything like that. I saw my friends playing chess in Duolingo. I have no idea what that is, but I don't think it's going to move the line for them. So if anything, my outlook for Duolingo is rather bearish. But that being said, I'm not taking any positions in this. 30% really is a drop from 36 last quarter and 40 and 48 the quarters before that. 54% daily active user growth in 2024 and 63 in 2023. That is fantastic, but the market really did get ahead of themselves in this valuation at 21 billion, I think, was the peak valuation I saw for Duolingo. That is crazy. And ever since then, since May, they dropped 71%. Really makes you wish you had shorted that. Certainly, I wish I had been short Duolingo. Sarepta dropped 11% on preliminary earnings. So Sarepta is this biotech company that really suffered in the last year. The stock was at 110 and dropped to 10. They make drugs for DMD, which is a Duchenne muscular dystrophy, basically a very rare disease that will turn you into a vegetable. And maybe not you, if you're old enough to listen to this and be interested in this, it will turn your kids into vegetables. So really nasty disease. I think the average survival age, the average lifespan with DMD is below 20. So that sucks. Uh, Elevidys is the drug in question. Had a rough quarter. A couple patients died from liver failures, so it wasn't really clear if the drug is killing you or or the disease. Your choice if you get this disease is really to either take a certain death as a vegetable or take your chances with Elevidys eating out your liver. Eating out is a wrong choice of words, but yeah, got me some slack. So basically, this company is trading at 2.2 billion market cap, around that, with almost 2 billion in revenue. I think that is such a wrong number. The market cap. I do have a position in Sarepta. Maybe I should make a video about this, although I don't feel qualified to tell you anything about this. Certainly do read the press releases that companies report. Certainly do read this one. If you follow biotech, do read their press releases. TSMC, I told you about that. Here's the press release for Sarepta. And on the Polish stock market. So the Polish stock market had a couple interesting situations there. Dino, which is a company I follow and I like quite a lot. This is a major retailer for Poland. Sort of a miracle company, one of our prides. Fantastic run there. Since 2018, it went from, how much is this? It went from, there were a couple of stock splits, but about from 3 zloty to 40 now. So that is a 10 bagger in almost 7 years. Fantastic company. I do like it. It has been dropping for about 6 months now, with the market disappointed with like-for-like sales, but I am overall bullish on the company. I do have a position in it, and if it keeps dropping, I will keep buying more unless something changes. But what was funny is the stock dropped from 42.3 to below 40, which was about 7% on no news. There was no news at the company. Nobody got poisoned. Nobody got shot. No stores blew up. The CEO didn't himself. Well, I really shouldn't say this, I guess, for my outreach on YouTube, but too bad. Uh, it was described to suffer from something called the Biedronka effect. Biedronka is a competitive company. It's a competitor of Dino. It's also a retailer, one of the biggest ones in Poland. It's controlled by Jeronimo Martins, a Portuguese holding. It's a huge company, and it reported like-for-like sales. And people decided, hey, Biedronka sucks, let's sell Dino, which really makes sense if you're a Polish investor in the Polish market. So another one that I like, another company that I'm bullish on is Żabka. Żabka is a fantastic convenience store in Poland. If you've ever been to Poland, you know it. Anybody that's anybody that's ever been to Poland knows what Żabka is, should know what Żabka is. And the company dropped from 23.30 to about 22 in a couple days because they published preliminary results for Q4 and the market didn't like that. I'm starting to see a pattern here. And if you take a look at this, really this has been blamed on the dropping like-for-like sales for Żabka from 7.1 to 4.8. I'm not too concerned about this, although of course I would have preferred if my company grew instead of growing slower. I do like how they are developing in Romania, from 60 stores to 173 in a matter of a year. That is pretty good. I do think that they are sacrificing a little bit of margins for the growth, but I think that's fair. Why am I even telling you about this? I made a separate video on this. Go watch that. The next thing that really caught my eye was Vitchen. This is a Polish manufacturer of bags and shoes and accessories like gloves and wallets and stuff like that. The company jumped from 17 to 18 and a half. I think about 8% that is. In general, the stock has been declining for a couple of years and I've been following it. I like this company. They did have some trouble financially, so maybe I should maybe I should analyze that, make a model of that or something, and post it for you. But I do have to, and I should look into it deeper myself. The stock jumped because the shareholders meeting decided to start a buyback program, and they're going to buy back approximately 3.7 millions of shares for a price lower than 22. What's interesting is the 3.7, the number, because they have 18.5 million of shares. So if you do the math, really, they are prepared to buy back 20% of the company. And this is something that I see very often in companies that are outside of the US. They just buy back huge chunks of their own business. While you're happy that Berkshire bought 0.1% of the business back and you are now making 10 cents more, you have companies like this that are upping your profit by 20%. And this happens. And this of course is a pretty big chunk to buy back for a company like this. I don't know if they are going to succeed with it, if the price is going to go up, if it's going to be stopped out, but it certainly is encouraging. Also, another thing may be that they're having a bad quarter. They just had a quarter that was bad. Maybe they know what's going to happen and they are getting ready for it to catch the falling knife, which is going to be their stock. Maybe. What have I been reading? I finished reading The Reminiscences of the Stock Operator, a fantastic book by Edwin Lefebvre. Go read it. It gives you a nice insight into what Wall Street looked like 120 years ago. It tells you the story about Jesse Livermore. I think I made a separate video just about those takeaways from the book. Go watch that video. Go give it a like and share it with your mom, your friends, and your dad, if you still talk to him. Overall, good book, easy to read, pretty interesting, but it's not going to teach you too much. I started reading Paths to Wealth through Common Stocks by Philip Fisher. Philip Fisher is an investor and a writer that has been recommended by the Oracle of Omaha himself. So I think that says a lot. But if you want my personal opinion, a bit hard to read, a bit dense, but really does pay off. I wish he used simpler words and shorter sentences, particularly when English is not my first language. But maybe it's going to be easier for you, and it certainly is going to be beneficial to you. This book, everything that he ever written, basically, and certainly the first one, Common Stocks and Uncommon Profits. Go buy that and read that. And I'm also reading Buffettology, which I have on my desk right now. Buffettology is a book by an ex-daughter-in-law of Warren Buffett, I think so, the wife of his youngest son, Peter. They're no longer married too. And she is kind of writing this book, and in the introduction she said that, I'm about to spill the beans, tell you all the secrets of Buffett. I don't know how true that is going to be. So far it is pretty basic. But I do like to get back to the basics. I do think, and a lot of the investors that I know, respect, and follow, and who taught me a lot, keep saying that getting the basics right is the most important thing in investing. Everything else is just discipline and working hard and looking at tons of different stocks and learning about them and understanding their businesses and following your rules. Basics are incredibly important. So basically what you want to know is what really is a dollar? How much is it worth? How much is a buyback worth? How much is an asset worth that a company has already bought? What does it mean that what does it mean that the property, plant and equipment is worth $2 billion in the company's statements? It's sort of like martial arts. That's a pirated quote from one of my favorite investors ever. By the way, if you know who this series is named after, who made series like that, who inspired this table over here, do tell me in the comments. I will give you, I don't know, I'll give you a heart, but you're a real one. I'll give you a like and maybe pin your comment. One of my favorite investors ever said that investing in finance, like he used to say, is very close to martial arts. And it really does and can certainly take years to understand the basics, to have a proper grasp of them, to have your own theories of what something means. How much is an asset? What is a discount rate? what really is inflation, how to hedge, what does it mean to hedge, what does it mean to be diversified, how to diversify, how much to diversify. All this stuff really does matter. And if you can dwell on it, maybe with a beer, maybe get a beer, get your friend, sit him down in the garage, play some Wu-Tang Clan, and watch some interviews with Warren Buffett and think about what he's saying. Think about what really is capital, what is the cost of capital. And what had I been doing throughout the week in general? I was looking at a couple stocks. I was looking at BioMarin. So BioMarin is this drug manufacturer biotech company from the US that's worth about $10.5 billion. I like this company. They have a nice portfolio of really unique drugs, really rare diseases, and one of the drugs they have is Roctavian, which is a drug for hemophilia A. Hemophilia, if you don't know, is when you start bleeding and you can't stop because your blood is lacking factors. In case of hemophilia A, it's lacking factor 8, and you will just bleed out to death if you don't make it to the hospital. So, really nasty disease. And Roctavian is one of the most expensive drugs there are. I think it's a one-time injection, so it's supposed to cure you. Not sure if I'm telling you the truth though, so go check it out. I haven't finished studying this drug and this company for sure, but it does seem really interesting, and I will keep studying that because I like biotech. So yeah, so there's that. Thank you for watching. This is probably it. I don't think I have left out anything. This has been the Impact Factor. Go check out my Patreon. Go on Patreon. Maybe I should do a promo or something like that. On Patreon, you can find my analyses and models. Some of them for free, so you can check out how I think about investing, what I think about. On X, you can see my sort of more current ideas, comments when something is not worth writing about on Patreon or making a video about. I just post a quick tweet on it, so I'm there too. Give me a follow, give me a like, let me know what you think. Maybe let me know what you would like to hear, and do let me know if you know who this series is inspired by. This has been the Impact Factor. Thank you for watching. See you next time.